Hello and welcome to Beneath the Surface with Scott Gibson. Scott recently sat down with Leonard Mellman, editor and publisher of the Mellman Report. They discussed how the lack of willpower from politicians may mean good news for precious metals. Enjoy.
Hi, my name is Scott Gibson with Kitco Gibson Capital. I'm here with Leonard Mellman, editor and publisher of the Mellman Report. Thanks for being with us, Leonard.
Oh, it's my pleasure.
Now, I'd love it if you could talk a little bit about your expectations for gold. That's what I'd really like to talk about today, and what you see coming for gold and the gold price.
Okay, what I try to do is put my expectations for gold into a much broader context. And the context that I'm focusing on now is the general world movement, which I believe is powerful, and it's that many members of the public are losing faith in the ability of government, economists, government politicians to handle the difficult problems we're facing. As that number grows, I think many of them will be looking for alternative investments, get their money out of conventional investments, and I think as the year develops, we'll see more and more move into gold and silver.
Nice, nice. And what's your take then going forward and what the gold price might do?
Well, I just published my annual forecast on the website and in another magazine I write for. And believe it or not, what I'm calling for is $2,400 by the end of the year, because I think this trend of people becoming disillusioned will accelerate during the year. By the way, it's the same kind of logic that I used last year, and I wrote that forecast in December of 2010 when gold was approximately $1,250. I forecast $1,850, and believe it or not, I missed on the short side. It actually peaked around 1930. I believe we'll see the same kind of pattern, relatively choppy movement in the first half of the year, with a powerful move gathering force in the second half of the year.
And what are the things that you can attribute to that force? What are your expectations of the outside events or things throughout the world that are going to be affecting the gold price going forward?
One of my main considerations is trying to evaluate the future course of the US dollar. I think the dollar, the fundamental American economic information is terrible. Massive deficits, horrendous national debt, a complete inability to finance the consumer business of the United States without massively borrowing. But what's kept the US dollar at least relatively strong is this huge influx of capital, primarily from Europe, escaping an even worse situation. But I think there are finite limits to that capital, and we're starting to approach them. So my estimation is, as the inflow of euros and euro-related currencies into the dollar begins to ebb in the second half of the year, the support for the dollar will diminish, and we'll see lower US dollar quotes, which of course will be reflected in higher thing quotes, and the monetary thing is gold.
And gold did really well last year. Even through the volatility, it was still up around 20%. Gold stocks, however, were down around 30% as measured by the TSX Venture Exchange. What are your thoughts going forward on sort of the discrepancy and how that might play itself out through 2012?
I think there are trends going on in the world that are acting against the ability of junior gold mining shares to advance their projects toward production. We've got massive Aboriginal opposition. We've got environmentalists who seem to hate every natural resource development. We've got regulations that just keep growing. They are eating up the capital of junior miners, which is going into all of this paperwork and public relations rather than into the ground as exploration. And I think that's acting as a real concern for the typical investor. Also, the whole banking establishment, given the terrors of the last 3 or 4 years, is becoming very risk averse. So capital is becoming less available. And it's all that combination that I think is causing the gold shares to perform poorly. A classic example, gold in 2007 was approximately $800 an ounce. The XAU index, the mining share index, at that time was about 195. Today, gold closed at 1,677, and the XAU index is still 195. That gives you an idea how dramatic has been the underperformance of the average share. And one last quick word, I really believe for mining investors, they should at least put a little more interest or a little more emphasis on those junior miners that have already entered the production construction cycle. Those, I think, have the best potential for actually making a lot of money, because let's face it, at $1,700 gold, you'd almost have to be a blunderbuss not to make money as an operator. I'm a little shy on the very major companies because simply their size mitigates against huge percentage gains. So that's where I'd be looking through the ones that had already passed through all the hurdles we talked about and are now on the path to production.
Well, we're here in Vancouver at the Cambridge House Resource Investment Conference, over 500 companies exhibiting and close to 10,000, if not more than 10,000 investors. One of the superior investment conferences in North America. What's been your take on this conference?
It's been terrific. As I was fortunate enough to be at the speakers dinner last night, talked to Joe Martin, and he explained, among other things, that we are not only is the conference popular with Vancouverites, but we are getting 600 people from other countries and another 600 to 800 from other provinces in Canada. So this conference is now so well known, it's becoming a draw of its own throughout the world. That's a tremendous plus for Vancouver and for mining in general.
It is. Thank you very much, Leonard.
Oh, it's my pleasure to be here.
Appreciate you being here. And again, that's Leonard Melman of the Melman Report. My name is Scott Gibson with Kitco Gibson Capital. Thanks for being with us.
Thank you for watching Beneath the Surface with Scott Gibson. Stay tuned for more.